Let's do the legal disclaimer first. Hi guys, my name is Simon. I'm with Trade and Perform Coaching. I'm a professional trader, a trading mentor, trading coach, whatever you want to call it. There's no sales pitch here. This is just designed to help some of the members in my room, and then I have not been focused on running the room over the past years. I've been ramping up my own trading significantly, so this is an opportunity for me, as I see it, to give back to others and help out a little bit. So let me get the disclaimer up first. I have to do that part. I'll read that. So, important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. Excuse me. It's been a long day. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you cannot afford to lose. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve the profits or losses similar to those discussed on this channel or in this video or in this webinar. The past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before you ever invest or trade any financial instrument. Okay, we got that out of the way. Let's go get to the good stuff. So let's see. I want to thank Brian for sending me the agenda background. So first of all, I'm a professional trader. I've been trading first as a stockbroker. I started off way back in 1994. Shortly thereafter, I left a broker, started trading for myself, then started a hedge fund way back in 1996. Ran that for a decade, did well for myself. Did not like running a hedge fund, the back office part of it, so I left to trade for myself at that point. And then recently I ramped my trading back up again, probably about starting last January or February. Got really serious about pushing my trading size up again. So anyway, 20 years of experience. Almost all of it is concentrated between individual equities earlier in my career, and then the better part of the last 15 years has been index, oil, and gold, particularly the ES index, right? Important. I've blown up accounts. Really important to know that, particularly when I was younger in my 20s. It really freaking hurt. I was lucky enough to have a father who supported me in trading when I started college. I made a ton of money, at least for a college student, and I promptly blew that up, started again. I blew that up, and then finally, once I got in and I understood the risks of managing money for other people and for myself and the risk of ruin, I learned to control my trades better. But through most of the 90s, I still took significant swings, talking about 20 to 30% equity drawdowns, but I was making 100 and 200% over the course of a year, so 20-30% wasn't all that horrible. However, there did come a time around right after the 2000 crash where I just said I just have to stop drawing down significantly, and I significantly reworked how I trade and what I look for, looking for not just edges and not just patterns, but significant edges and significant patterns, almost none of them involving any type of technical indicator besides the use of tick, price action, using multiple time frames, one on top of the other to understand what the market's trying to achieve, heavy use of at least my version of volume profile or TPO, and what my main goal is, both in my own trading and in helping others learn, is here's the real question. Everyone works really hard for their money. And when you look at the market, especially when you look at it today, right? When someone just takes, this was our trading chart for the day, untouched from the way I left it at the end of the day, right? And when you look at it in hindsight, you would have gone, well, hell, I just should have shorted right there. It was right into the zone and held all day, and I had an easy 20 points. Unfortunately, it just doesn't work out that way day by day for lots of reasons. First of all, A few other things you should know about my approach. I'm a leveraged day trader. Okay, that means I have to be very specific about how I enter, how much risk I can take, right? And how much heat I'm willing to accept, because I can't draw down psychologically. I can't afford to draw down, right? It's very damaging to me to have to dig out of a hole. I hate working to dig out of a hole. It's actually terrible. Okay, let's see what else he has. Primary instruments that I trade now are CL and ES, occasionally GC, and occasionally NQ. And so I start my day. So I'm going to go by how Brian has me start the day. So I start with a pre-day checklist, which hopefully I have right here. And you know, it's so funny. When I used to do these, I'm a little bit, I don't want to call myself a perfectionist, but I want to sound great when I do these things, just like anybody else, right? And after listening to so many other webinars, people explain stuff, and I get the idea that they just don't always go so smoothly. So this is my at least a rough draft of a version of my pre-day checklist. And so the first thing I want to know when I come into the day is what the overnight looked like. And what I'm looking for specifically here when I come into the day is I want to know, has there been a change in character overnight that's different from prior nights? So I want to know how many points was in the overnight range. For example, someone in my room came in yesterday and said, hey, wow, the overnight range was really volatile, right? And I said, well, actually, and this was going back, let's say today's Wednesday, this was Tuesday, so yesterday morning, and I said, well, actually, the range was 10 points overnight. That's perfectly normal. There's nothing out of the ordinary. We've been getting 10-point overnight ranges for quite a while now, right? And then I want to see, again, is there an increase or decrease from prior overnight ranges? And I put little explanations why over here to the right, right? Are we opening above, below, or inside prior day's range? That's important, obviously, because if you're going to have a bull move or a strong move to the upside, you got to get above prior day's high, right? And vice versa for a bear move, right? Is the market trending out of London? Very, very important to me. And normally a strong signal that we're going to move up, but that's part of what made today so very tricky, right? Are there any Fed speakers on tap, or is it a Fed day or a non-farm payroll? I generally suggest, and for my own trading, I generally skip non-farm payrolls and Fed days. As of the last 2 years, those days have been relatively benign, but I think you would have seen on the last Fed day, I think we had a 20 or 30 point rotation straight down, right? And because I trade size, and because it's so important for me to consistently keep my capital stacking in an upward fashion, there's no trading on Fed days and non-farm payroll, because I cannot compete against Goldman Sachs when they shove 4,000 or 5,000 contracts down my throat. I just get run over, and they don't care about my support resistance zones, which are one of the keys to me being able to detect what's going on through the day. And then finally, what was the prior day's first hour range? It's really important. For those of you familiar with Paul Tudor Jones, he called the 1987 crash. And on the day that he called that crash, the first thing that he says to the reporter, he really declined to expand on what his short position was or where he covered. But the first thing he says is there was a significant expansion in range in the first hour of trading, which really let us know that we had a change of character and a potential for a very large down day, right? So I always look for that first hour range to expand, because I'm a rhythm trader, right? If the market's trading as it has been between 7 and 15 points, I'm looking between 10 and 15 points to find a counter move in the market. I'm a counter trader, and I specifically trade ES for that reason, because of its normal ability. If we look at a larger time frame, let me pull up just a blank chart here real quick, and we go to a larger time frame and we look, ES does a lot of just back and forth going nowhere, right? With the trick being that occasionally it goes from one extreme to another extreme in a straight line. But at the end of the day, what it really likes to do, it's a matter of detecting what the key rotation is and who's in control and where the key support resistance is. But with the exception of, so this is what it looks like This is what ES looks like if you go back over the last 10 years. This area right here is what ES, wow, let me see if I can draw. This is what ES looks like the gross majority of time over the past, since I've known it, going all the way back to 2000, right? But every once in a while, we get this right here. If you recall, this is all of February, March, and April. And then the amount of range we get really varies, right? If you look in early January, it was very tight, small rotations. The majority of these were between 7 and 10 points during our trading day, right? And then if you go back even even further, excuse me, it's just been a long day. I went all the way through the day today. You can see that we get this constant change between balance, but over an extended range, sometimes wider, sometimes narrower. And then we get these short occasions, like again what we just had in February, where it rips up. And so what happens to most traders is they figure out one part of the market. They figure out, oh, this is momentum. A lot of people can trade momentum, right? Because new highs beget new highs, or they can trade momentum down because new lows beget new lows. And they'll spend a lot of time, they'll make a lot of money for a very brief period, but then they'll get this, or the inverse. They'll get very good at, give me just 1 second to clear my throat, grab some water. Hold on 1 second. There we go. They'll get very good at, well, I short the high and I buy the low and I trade it back and forth. What happens to those traders is as soon as we get this type of market, they tend to give all that money right back, right? And so Dr. Steenbarger, who's probably the preeminent trading psychologist for traders, has consulted to numerous hedge funds, points out that there's 3 cycles that traders have to make it through as day traders. They have to make it through the 3-month cycle, the 1-year cycle, and then the big one's the 3-year cycle. Can you imagine just going through 3 years of making money and then giving it all back? That's the hard part. So what I aim to do and what I've learned over the years is that there's very specific edges that I can look for that repeat, not all the time, but a great deal of the time, right? And that I have a certain playbook for when we're in a trending market, which is, by the way, when we trend like this, unless I catch it right off the low, I tend to do, that's where my performance tends to be the worst. Why? Because I count on rotations down to pay me, right? And then when we get into markets like this, I tend to do my best because I can catch the market at the edges, and I tend to ride these back up and down very, very nicely, and that really helps significantly. So now let's go to, let me get to the next part of the agenda. So I also have a checklist through the day that I go through during the day. Let me pull that up really quick. See if I have checklist pre-market, open. Let's see, post-open checklist. There we go. So again, I'm not doing this right before each trade, but what I'm asking certain questions. First of all, I want to know the angle of attack of a particular move. When a market is trading at a 45-degree angle, doesn't matter which way you look at it, or particularly greater than that, that's when zones tend to get busted, support levels tend to get busted, and we tend to have range expansion. So so when that occurs, I get very cautious in these areas. I want to see evidence that the market is going to reverse. Okay, so bear with me. It's been a while since I've done this clearly, so I'm just going to kind of go through my checklist. I look at the 15-minute bar. I want to see both whether we can trade above the last 5-minute bar, and also additionally, okay, thank you, Brian. I want to talk about I want to see whether we can trade above on a 5-minute bar, and I want to see if we can trade above on a 15-minute bar. That does not mean I have an easy trade automatically. What that tells me is that the market is not going in a straight line this way or a straight line this way, and I don't blow the daylights out of my account trying to step in front of a freight train, right? So to relate that checklist to today, let's just go through step by step, and we'll use the checklist. and how that related to today. So when we came in this morning, and I do have, pay no attention, this indicators are highly modified, pay no attention to this whatsoever, but just they give me a quick look when I walk in. I look at all these multiple time frames, and so let's just look at the 15-minute, right? When I came in, this is 8:30 in the morning. This is about the first time I took a look at the market. Let's get rid of these chicken scratch marks. And I look and I go, okay, higher highs, higher lows. Hey, is anyone else having an issue with the sound? I have a huge bandwidth. Brian, is the sound okay? Can you hear it? Sound is fine. Skippy, I hate to tell you this maybe on your end, but I have a big fat T1 coming in here. You may need to, Skip, you may need to drop and come back into the room. And that might help. Okay. And I'm recording it, just so you know, so I will post it. So when I came in on the day, pay no attention to this. This requires very special instructions. But when we're coming in, the first thing I'm looking at is we're making higher highs and higher lows. I'm not eager to be shorting. As a matter of fact, the first thing I'm thinking is, because if you come over here and you look at this exact same chart with NQ, okay, which they tend to trade hand in hand, NQ has the exact same pattern. We're in trend day up. Here's London open at 2 a.m. and there's nothing but buyers all the way through here. And so my thought process is when I'm coming in is that, and Skippy, you're logged in and out, like I have 1, 2, 3 logins. You may want to try also calling in on the phone line is another option to see if that'll work for you, just so you know. So when I'm coming in the first thing in the morning, the first thing I'm noting is, hey, I'm not overly eager to be shorting. NQ is leading to the upside. ES is coming up. And then the other part that I'm looking at is, and I don't want to make it overly complicated, but I do rely on volume profile significantly. And so when I come in this morning, this is where we had a large HVN trading right above 2340. When we walked in, let me switch this back over to ES. Okay, when we come in, we're already trading well above that 2340, right? When we walk in at 8:30 in the morning, we're trading at 2344. And the first thing I'm thinking is, as long as we hold that 2340 area, right, and that's right here, again, just drawing, as long as we hold that 2340 area, buyers are in control. So the question becomes, well, what went wrong? Because NQ opened up and it did well, and you know, it was driving higher. ES looked good. We were holding both above on the day session, and if you look on the 24-hour ES chart, this was the high volume node that I had marked off, and this was basically one of my key areas, 44 to 43. So we had 40 to 38, and we had 44 to 43. And if you look, the market respected those areas today when we first came in. This is what did I have marked off? Let me look at this one more time. 43, 44. So this is 44. This is 43, roughly. And you can see, first time into 43, 44, in each of those occasions, and we had this marked off on the chart, we found responsive buyers out of the gate. Everything's looking, and remember, you're looking at the chart afterwards. At this point, when we're looking at this chart, everything looks hunky-dory, and even if this breaks, this 40 level, this 40.38, this is my next level that I'm looking for responsive buyers. And the focus, just so you know, on the zones, for those of you that are new, the focus on the zones is to get the first touch of the zones, and then we're looking for, if the market's really volatile, additional evidence on second and third touches, and we're looking for key 10-point stretches. So when we came in, right, so this is what my chart actually, let's get rid of this now. This is what my chart actually looked like, right? And we have this broken down. This is the NYSE tick, and it tells me, it lets me compare what the S&P 500 is doing, how it's performing. versus all the stocks in the New York Stock Exchange, right? And then if I can get to it, if it'll let me, I have what the NASDAQ is doing, right? And then I also have a 1 minute chart. I do not trade off the 1 minute chart other than looking for finer tuned clues off the tick. I do not care about patterns off the 1 minute chart. There's too much noise. It doesn't help me. Okay, so with that being said, right? So we came in this morning, and we generally like to wait out the first half hour, because what are we trying to figure out in the first half hour? First, we're trying to see if we can break new highs. One of the difficulties was with today is normally I like these zones spread out, but we end up with these like spaghetti strings of zones because we've been, if you look at the volume profile, right, see how everything's just been stacked up on top of each other. So resistance gets stacked up on top of resistance, place after place. My upside target for today, my plan for today, was that the market would open up, right? Here was the gap, right? And so I have it on my checklist. So I'm going to go back to my checklist because that's how I keep my head straight when I'm under pressure, right? And so one of the questions is rotation size. Were we able to attain half gap? Are we at a greater than 45-degree angle, right? And has the IB high, which is the first hour high or low, been broken? So I'm generally, my highest odds trades come after IB high or IB low get broken, first hour high, first hour low. Rotations into key locations on 10-point stretches or greater, right? And then I look at the NASDAQ versus the ES. So this morning, there's no rotation in here unless I'm just, except for my traders who are uber aggressive, there's nothing to do, right? The most logical thought process was, hey, we should short 47.49, except my ultimate target for today, I wrote this down, was either this 54.57 or this was my extreme upside target, was 59.50 to 61.50. Those are my upside targets, right? And then you can see the targets below, right? The front and back of this location right here, the point of control was 38. I had it 38. It was actually 38 and a quarter. It was off a tick. And then we had 34 and 3/4 to 33. And then finally we had 30 and 3/4 to 28 and 3/4, right? And this area has been auctioned over multiple times. So when we did get up into this area, first of all, it came in at 9 a.m., right? We had already established that the low was able to hold on a 5-minute basis. And if you look at NASDAQ at the exact same time, NASDAQ was on a tear. This is the definition of a gap up. It's called, and in volume profile terms, it's open drive higher. There was no attempt at half gap, and there was no attempt at gap fill. And when you get those, that immediately tells me in most markets, and again, what I'm looking for is to maintain high odds on my trades. That immediately tells me, let me make sure I'm going through. Okay, and that immediately tells me that buyers are in control. So I have a conflict here. I have the open gap holding. That tells me buyers are strong, right, and in control. I'm trading above the prior day's high on NASDAQ, and I'm trading above the prior day's high on ES, right? And so what that tells me immediately is that I want to be cautious on the short side, because what I don't want to happen is that the market makes an immediate move up into 54.57, 59.61. So the plan was, what the hope was that we would come back down and test this 40 or 38 level out of the gate, either holding at 41 or holding at 38 in the gap fill, and then getting a push back up, finding responsive buyers, coming back to 48, 49, and then trending up. You note that I wrote that above this area that the market has become very easy to trade through. We were disregarding the open gaps and shooting for this 54.57 to 59.61, and mathematically that was completely doable, right? If we came back to 40 and we had our 15-point stretch, that puts us right at 23.55. It was totally within the capability of the day to hit this area, and if we extended to a 20-point range, that would have put us right at 59 to 61. it didn't work out that way. And this is where we go, well, what was the clues that something was wrong? And it was interesting because Daniel asked, he goes, well, where were all the sellers this morning? And I sure would have liked to have known that too, because if you'll go back and look at your charts, it's rare to get a day where both NASDAQ and ES both gap up. NQ has an open drive higher, and ES doesn't follow, and I promise you it trapped a lot of traders. So I'm going to go through the clues that we had right out of the gate. First of all, if you look at the NYSE tick, as we were advancing, although it's too early in the day to get tick divergence, right? The tick was actually declining, which means the stocks on the broader New York Stock Exchange were being sold while the S&P 500 was being held or pushed up. That gets resolved one way or the other. Either the S&P 500 buyers are going to capitulate and sell, or the broader market is going to buy up the individual issues, and then the S&P 500 will accelerate. Because we're in the very top third of the trading range, usually the way it works out is that the sellers of the broader market capitulate, buyers come in, and everything goes up, right? And that's been the case for months and months now. So the first problem that occurred was that when NASDAQ pushed, right, and you can see here that we were at 9:20 Central Time. Here we are at 9:20 Central Time, and ES is going down. And it's the first time that I said during the day, I was like, hey guys, something's wrong. And so we're asking two very important questions when we start the day. And this is straight out of Volume Profile. What you're asking is, I believe in the auction process. And what you're asking is, what is the auction doing? What is it trying to do? And how good a job is it doing accomplishing that, right? So we just got above all the muck we've been in the last 3 days, right? The NASDAQ is pushing and ES is going lower. This is a very rare occurrence. And immediately, so understand that there's two things going on here, right? While we're discussing this, this is very clear to see. See this right here? Everyone's going to look at this. Here, I'll stretch out this chart so it's easy to see. Everyone's going to look at this when we're not under pressure and go, well, hey, that's obvious. ES is going down while NASDAQ is going up. Something's wrong. But as Denise Schul, who's another one of my favorite psychologists, my wife's a psychologist, she coaches me through this stuff, and I have my own trading coach as well. And they always talk about you have to separate out. When we come to work, right, we want to make money so badly. We're so used to getting paid for time spent in front of a screen, right, that you go, what your brain says is, this can't be. Let me see, someone's trying to hit me with a... okay. So, Brian, I think I'm covering that right now, just so you know. So, what your brain says is, this can't be. Since NASDAQ is pushing up, my anticipation is going to be that ES is going to follow it. NASDAQ tends to lead in most situations, ES up to the upside, and I don't want to drag this on too long, but if you'll go back and look on an individual basis, you'll see that that's normally the case. Actually, we can look very easily, and let me show you that. So most of the time, what you're going to see, let's make this a 5-minute chart, insert symbol, plot. Okay, and so what you'll see most of the time, this is ES on top. Well, now I have two ES charts. Let's change that. Format, symbol. That looked too identical, right? Insert symbol. Here we go. So most of the time what you are going to see is, and I'm just going to trail it up, as ES rises, NASDAQ rises. As ES falls, NASDAQ falls, right? Not always in perfect synchronicity, but it's pretty darn close. And if we go day after day, right, we're going to see gap down, both pull back a little bit, both advance a little bit, right? That's normal. right? And that happens almost every single day. These two are almost always in sync within a certain variable, right? So when you lose this sync, when this sync goes away, and I'm just going to slow it down so that everyone understands this point. When we get over here at the beginning of the day, and you see ES going down, right, and you see NASDAQ going up, immediately your spidey sense should be going off because something's wrong. And when I see something wrong in my trading, the first thing, and I said in the room, first thing I said is, something's wrong, something's not right. I don't know what it is, right? I don't know what it is, and it's all right because we deal with imperfect information, but I said, be cautious on the zones because something's not lining up here and I don't know what it is. Now, the first real clue that there was a problem was that right here. See how on the NASDAQ has done a 50-60 retrace right here. Neither one has broke the initial balance high, which is the first hour high, but we have done a 50 retrace here, and at the same time, we've hit a new low on ES. That was the first warning sign that we should pull back the amount of capital that we're willing to spend in the market because something's wrong. It doesn't tell us it's short yet because there's multiple possibilities, including, as you can see, an attempt to trap back in and a push back up. Now that's set up when you break IB low after the first hour, right? The normal trade is the first time back to mid. That's usually a short. The problem with that is when we came back to mid, NQ was hitting a new high for the day. It was very hard to take this, understand where this is putting us in a very complicated situation from a trade point. I want to get myself to a point where I'm absolutely have the highest odds of winning. If NASDAQ's hitting a new high and ES is just coming back to the mid, those two cancel each other out. There's no trade for me to do there, even though it worked perfectly, right? Because, like I said, 99% of the time, these two are in perfect sync, right? So now if I go back to the chart, regular chart, we know things are not in sync. And then, let's get rid of this. Right? And then as we're going through the day, notice, for a day that should be strong, look at the New York Stock Exchange tick. It's all at or below zero all of a sudden. As a matter of fact, even when we come halfway back in, the best we can do is manage a 500 plus tick. That's another warning sign, right? But we still have the problem because NQ is going up. So what I'm saying in the room is, guys, the zones are still valid, but be cautious, right? So you'll notice, first time into 23.40 3/4. And what we were looking for specifically, so everyone knows, is we were looking for a divergence between the S&P 500 and the broader NYSE stock exchange. What we wanted was the broader market to hit a higher low while the S&P 500 was hitting a lower low. That let us know, because it's a smaller index, that traders got over exuberant, they overstepped their bounds, and they're going to snap back to catch back with the S&P 500. That's what we were looking for, right? As when this came in, you can see support held just fine. It rotated back up, but there's another problem. We're now below the first hour low, and we're below the last swing low, and now we're making lower lows and lower highs. So here's where traders get in trouble, right? Traders have been used to the market doing this. As they're trading, they're used to the market coming down, slingshotting up, coming down, slingshotting up. And for a lot of traders, they're trying to hit that home run, right? So if you were doing that all day, you were really getting crushed, right? Additionally, they're looking for second tests of lows. And the other sign of weakness was when you go through this chart, right? Look at every second test of low. Normally this will create a counter rotation, a counter rotation, a counter rotation. And at every single low of the day, we broke that initial low, and we only had one meaningful counter rotation right over here, right? Also, notice the degree of angles. We went from a moderate slope down to all of a sudden this is almost a 65-degree down angle, right? Notice that when we bounced, right, the bounce was contained to less than a 50% retracement. Not at the high of the day, we fell well short. It's a 50% retracement from the last swing high, right? And that the market was unable all the way through the afternoon, from the last swing high, we were unable to break the following swing high. This is a key indicator when you're in a trending stock. That is a key indicator that the market's in trending mode, right? So you have lower lows, lower highs. So then the question becomes, did the support zone still work? Well, if you look, they did actually, right? So here, let's clear this out. Right? So 20, 23, 40, 75 gave a 2-point bounce. We missed, okay? We were sitting here ready to go long at 23.38. The low was 23.38 and a quarter, and it wouldn't have mattered if I was at 23.38 and a quarter. Let me tell you why. The first time through, only 114 contracts traded at 23.38 and a quarter, and I know I would not have gotten filled on a single contract that I put there. I would have had to be at 23.38.50, and I just wasn't willing to do that. The other thing that was really odd about the day that shifted was that you would expect a day that's going down. Notice how we kept shifting from small, tiny rotation bars to big bars, back to tiny bars, back to big bars. People kept looking at the NASDAQ thinking that the market was going to bounce, so no one fully sold it. Also, the tick, even though it was negative, was not getting to extremes. See how we get to, here's negative 900 right here. And you'll see it wasn't all the way until after 1 o'clock in the afternoon Central Time that we really started hitting negative 1,000 extremes. And even then, with the negative extremes, we weren't able to accelerate past the last 50, 60 up, right? So at this point, when we're trading below the last swing low, one of the checklist parts are, have we been able to break above what we would have wanted to see in our trading, right? And what you're looking for in your trading is, can you get above the last swing high? And when you do, you're looking for a 50-60 retrace. So let me show you what that looks like in real life, or at least an example. I can't show you in real life because the market is closed, but I can give you an example of that. Let me go to a 5-minute. That's fine. It wasn't too many days ago that we had it, so we should be having easy enough time finding it. Okay, so here you go. We're rolling down, right? We create a swing. I'm going to trace it. We're rolling down. We have 2 days. We start to roll down. We create a lower high, right? We then violate that high, press up, right? And then you'll notice when that occurs, I now know that buyers have at least attempted to make a strong attempt to buy, and I can now look for the mid retrace to give me a long side trade. That is a high odds setup, folks. If you're not aware of it, that is a very high odds setup. Notice there's no technical indicators in here. I don't have to have anything special. There's no voodoo to it. I just simply have to be able to read price action bars, and I have to be patient enough to let the market work itself in. I'll give you another example. See how if I'm the most, all of us are aggressive traders if we're trading futures, right? But notice starting from the prior day, lower high, lower high, lower high, and I'm going to count this point because we came down, we came up, and this is the point where we got an expansion of energy in the market, right? We come back up, we set a new high. See how we cleared above here? And then what I'm looking for, and it doesn't give it to me here, but it doesn't matter because I know that if I get it, I have a high chance of making money with it. I'm looking for, oh, and it did give it to me right to the tick. I forgot. Right to the tick gives me a 50 retrace and launches to the upside. This is critical, and let me tell you why it's critical. Because everyone who's trying to buy all the way down here, this is a big stretch, right? This particular day starts at 23.61 and it rolls all the way down to 23.40. I don't know what type of stops most of y'all trade with, but most people are going to suffer a significant amount of damage, especially when they're looking at long side trades. Notice that there's two qualities there that are really, really important. The angle of attack is greater than 45 degrees, right? It's close to 70 degrees angle of attack. We're unable to break the last swing high. We're breaking every swing low, and the test of the bottoms are not holding. We're constantly breaking those tests of the bottoms. Now, what people will become obsessed with is, oh, I'm trying to grab the low, and there is a way to do it. If you got tick divergence and you can read volume profile, there is ways to find, and we know the stretch, right? We know we're on a 20-point stretch. We know we're in a key location, right? But if I know nothing else, I know, hey, if I can break my last swing high and I can get a 50-60 back, I have very high odds location of getting a big shift back to the upside. And the reason that's helpful is, again, once we go to a greater than 45-degree angle, and we can't get any counter rotations. And notice all the way through here, right, when we really start to roll, notice how it's very hard for the 5-minute bars to close above. And if we went to a 15-minute bar, which is another one of our checkoffs, it's almost impossible all the way through here for a 15-minute bar to close above the prior 15-minute bar. And all that tells me when that happens is to start looking for two-sided action. So the first thing I need is a 5-minute bar to get above another 5-minute bar, and then I need a swing high to get broken, and then I need a retrace. That's not a lot to ask for, right? But it really, really helps. And if you'll look, today was not an exception or a surprise. If you look at ES, right, this is another example of a day where we pushed all the way up. We failed to break the high of the day. That's exactly like today. We failed to break the high of the day, only today was worse. We couldn't get back above the midpoint, right? And then if you look at this angle of attack, right, notice that it never was able to break the last swing high. Notice when the price action changed. Here's the last swing high before we push to a low. Notice the following day, we close above, in this area, we close above the last swing high before the final push down. Now watch where, when you draw up your 50-60, it comes right into the 50-60 and gives you a beautiful launch to the upside. Now, this is all important because while I'm very good at catching these lows and making money, I want to know how to increase my trade size or decrease my trade size based on the amount of risk I am taking, right? I want to know where things are critical, like, for example, when we break the low of the day, right here, and we fail to break the high of the day, right? So now go back to today's trading, right? We break the low of the day. We failed to break the first hour high, right? We start failing, we make lower highs, lower lows, and then all of a sudden we can't make past 50 retraces all the way down. This immediately tells me, hey, pull back my capital unless I'm the most aggressive, right? And what's the next thing I'm looking for? I was looking for at any point, could I break a swing high, right? And that's why Daniel told me. So Daniel, one of the members in the room, he said, Simon, he goes, I'm so glad. He goes, I have a friend who's also a trader, and he got killed today. He bought all the way down. He just got absolutely murdered. Now, we didn't make a killing in the room today. We were not short. I never saw the market and looked at it and said, hey, this is a perfect short market. Go short to the max and stay short. Did not say that. What we did say was be cautious on the way down. There's a problem, right? I don't know what the problem is yet, but there is a problem, right? Tick is all negative. We're making lower highs and lower lows, right? And normally what I would have looked for is both, in this situation, had both NQ and ES broken their first hour lows, I would have been, where my high odds trade setup would have been for a short, would have been right here for a push to gap fill. That would have been the target, right? But the fact was, when we were coming back to the mid, NASDAQ made a new high and that wiped that trade out. Now, is that okay? It is, and let me tell you why that's okay. It's okay because my objective is to make money whenever the odds are highest, right? If you're playing blackjack, you'd only want to play when it's 21 if you could, right? If you knew you get dealt 21, you'd only play roulette. If you knew red was coming up, you'd only bet red. So what we need to know is when to come off of the trade and when to come on the trade. Now I want to show you the one last piece that came in. Our highest odds trade that we look for is 5-minute tick divergence into a key location on a stretch. We review this every single morning in the room. I coach it with my clients. I explain to them if they want to grow an account, this is what you are looking for, right? Now, look at the stretch that we're on. We've come from 23.49, 23.50. We've come all the way down to 23.30. That's a 20-point stretch almost. Key location. Right into the lows. notice all day long I could not get 5-minute tick divergence all the way through here. Now, I don't think anyone took this trade with 15 minutes left in the day, nor would I recommend it, right? There's too much that can go wrong in the final 15 minutes of a day where it's trend down, right? You have to be on the most cutting edge of aggressive. However, see where I got my 5-minute tick divergence right here? Okay, right in here. That brought me just 2 ticks off my key zone, right? Look what I wrote in the notes the night before. I'm looking for a stretch with tick divergence, right, to push up. We came within 2 ticks of that, and I got my tick divergence right there. And sure enough, what does it do? It rolls from 20.31 all the way back up to 20.35. Also, the other important thing is the zones. When you're looking through the zones, right? Are they effective or ineffective is the other question. And notice as we came to each location in the zone, this zone provided rejection. Now, we were within the context of an open drive higher in NQ, so I passed on the short, but the location worked. This 23.45 to 23.44, first time in, we opened here, pushed down, rotated up. The zone worked, right? We rotate down to 23.40 3/4, rotation off of that, and then we come down to 23. We just missed 23.38. It was 23.38 1/4. And we already figured out that the second tests aren't holding. There's no point in even trying, right? So we missed this trade, but the point isn't whether we missed the trade. The point was that we could get our trade to such a location and to such a point where and also, by the way, we had tick divergence here. I just didn't want to chase up because of this area was a chop area here. I'll just explain. This area has been chop city, and I wanted it to come in cleanly and hit me the first time. And I did not want to chase because my concern was, I wrote it somewhere here in the notes, I don't know where it is now, but my concern was that we would sweep through this area, and sure enough, we ended up sweeping. So it had to give me my 28.38 exactly, or I wasn't interested in doing business. That being said, it still gave me a rotation. Why is all this important, right? All this is important is because I already know coming into the day where we're likely, highly likely to get counter rotations. So now I'm just looking for the small little details that either enhance that opportunity or unenhance that opportunity, right? Finally, we come in and we get to this 34.78. If you notice, we pushed all the way in. It took forever and a lifetime, right? If you took the top of the zone, it finally rotated up to 37. It was good for 2 points. The zone held, and remember, I published these the night before. This wasn't anything I created during the day, right? And we rotated up. We already knew, again, we weren't getting tick divergence into this area. We knew the second test of the lows were not holding. They were constantly breaking. And then finally, at the end of the day, the setup we were looking for without the stretch, straight into 20. We missed this by 2 ticks, but it gave a beautiful rotation. Why is this important? Because I can carry it to any other day of the week, and I know exactly what I'm looking for to build my trading account, right? And I know exactly what the conditions look like that are most favorable to me getting the odds. And there's one last thing before I open to questions, right? Remember, the odds of a trade working, even if it's a 99% chance odds trade, right? Let's say 99 out of 100 have a favorable result, right? That means that there's 1 out of that 100 that will fail. That means potentially, it's important that you understand this. If you do 1,000 turns, right? Do 1,000 turns with a 99% win rate. That means that there's going to be 10 turns in that 1,000 turns that fail, right? And the random distribution of that failure can happen at any point. Therefore, even if you have 99% odds, your odds of winning the very next trade are 50-50. This is where this becomes important. You have to know which trades give you higher odds and which ones give you lower odds so that you can vary the size of your amount of risk you're willing to take, and you have to be confident. There's a big psychological component here. You have to be confident enough to take a stop and move to your next trade. And someone, and I'm going to brag on myself just a little bit, if you don't mind, because he really hit the nail right on the head. I'm going to see if I can find this. He sent this to me yesterday. And so Scott, who's in my room, right? And this is what he wrote, and he really hit it right on the head, because what gives us the ability to do this on a regular basis was this. He goes, Simon, I've seen many people trade, never sure how many are truly successful or not, but I have seen one thing about you that has been complete discipline. I'm not sure if your setups are any better than anything else, but you execute with consistency and discipline. I'm fairly certain that's your real edge, and other successful traders have over the masses. It's amazing to watch how you take a loss and move on, never wavering from the plan, right? So the point is, where the real edge is, all this stuff, all this information, this is my core information for understanding how to make trading decisions and reading price action. But my edge, my real edge, lies in adjusting my trade size properly, right? And following my trade plan over and over again. And when I don't recognize what's going on, I stop trading as absolutely quickly as possible, because the market's open year round. This thing's been going on since before I was born, and it'll be going on after I'm dead. But if I blow up my account, or I have to work for free for any period of time, that sucks. So in my eyes, even though I didn't make a killing today, right, I saved 2 back-to-back stops from possibly occurring. I kept everyone, I think everyone in the room, I'm pretty sure, no one in the room had a down day, right? And we all were kind of mesmerized by, wow, that's kind of funky and weird, but it kept us from getting crunched in either NQ or ES. And that by itself means we can come back tomorrow and execute really well. So what I'm going to do now is open the floor to any questions that anyone has. I know I covered a lot of material. And there's a chat box there to the left. Or for those of you in the room, y'all can hit me on Skype. So, can you comment? Can you comment on the importance of the trade plan and the specific checklist? Yeah, I can. So Brian was asking about the checklist and why that's so important, and I can answer that question. Probably everyone's experienced this, where you take a trade and you end up taking a trade and you go, well, why the heck did I take that trade? And you're scratching your head and you're like, I would never take that trade under normal circumstances. Or, right, you get frustrated, you take a stop, and then next thing you know, you take 3 or 4 trades in a row that are bad trades, and you really dig a big bad hole. And you're like, all these trades I took weren't in my trade plan. The checklist is important because it gives you awareness of what the market's going on. It constantly draws your conscience back. Like I have rotation size, 15-minute bars, tick divergence on the 1 or 5. Has the IB high or low been broken? This constantly keeps me back to the present of what the market is trying to accomplish, right? And what I'm looking for within that marketplace. Because otherwise, what I end up saying or doing, and what a lot of traders end up saying or doing, is going, well, certainly the market will turn up here, or certainly it'll go down, or there's no way it can keep going lower, right? But the point of the checklist, right, is to go, oh well, actually, no, we haven't broken a swing high. I can't check that off. We haven't gotten 5-minute tick divergence into a key area. I can't check that off. We are unable to recover a 50-60 retrace above the last swing high. I can't check that off. NASDAQ and ES are not in sync. I can't check that off. So then what that gets back to is the emotion of, no matter how strongly or badly I want to take a trade, right? I stop for a second and I go, oh, none of this is in my trade plan. And here's the deal. I put hours, even now, after doing this for 20 years, on the weekends, I put hours into looking at price action. And I put a ton of time in the morning and after market looking for specific locations where I want to trade based on volume profile, price structure, and what the markets are doing overall, right? So if I don't have this checklist, right, most of us are not thinking in our right minds while we're trading. We're thinking we have stress, we have adrenaline going, and then we end up wanting that trade so bad. Especially my experience has been with guys who make the transition from working to full-time trading, right? They want that money so badly that they're just not going through their basic checklist to figure out whether they're trading in the right location, whether they have their stretch, and checking off whether the trade they are taking fits within their risk parameters and whether they've measured it out beforehand, right? All of this comes back to books that have really influenced me, from the Turtle Traders to more recently a gentleman named Thorpe, who wrote about gambling and blackjack and how you manipulate those systems, right? All that comes back to where are my highest odds, and I'm only wanting to trade, which, by the way, the market gives me this opportunity almost every single day. I'm only wanting to trade where my highest odds opportunity lie. And if I can't get that opportunity, that's the only way you can trade. If you ever hope to make lots of money in the market, the only way you can do that is by increasing your trade size. And you better be very, very specific about what conditions you need to trade in and what it needs to look at, like, so that you can take money from somebody else. Because every day, and Steve Burns, who's a swing trader, tweets this a lot, you are trading against the best computer programmers, against the best traders, the best hedge fund managers, and the best capitalized people on the face of the earth. If you want to take money from those people, you better know exactly what you're doing and how you're going to do it, right? So, and then the last piece is this: meditate, be calm while you're trading, accept what the risks are to the trade, and know that there's a learning curve to getting really good at this. There's low barrier to entries in this business, just like there are in Las Vegas, because people like me, from a professional standpoint, want your money. I want to take your money from you and put it in my pocket, right? Just like in Vegas, all you need is $5 to sit down at a table, because the casino wants to fleece you from that $5 as quickly as possible, right? They're going to assume you don't know what you're doing. And as I've read in a book, right? If it comes down to a bet between the sheep and the butcher, the sheep might win sometimes, but I'm going to bet on the butcher every single time, right? And that's kind of my philosophy. I want to be the butcher, and I want to be the one that comes out ahead the gross majority of time. So, and that's why I have a better edge over, and have been able to survive and thrive in this business over 20 years. So, does anyone have any questions? Any other questions? Thank you for the question, Brian. And Daniel, thank you. Just trying to see if there's anyone else who's still in the room. Anyone else have any other questions? I think I covered it pretty good. Here's another question. Hold on a sec. Coming across Skype. Let's see. Okay. So, at any rate, yes, if you would like to come in the room, if anyone would like to be a guest in the room, you can email me at tradeandperform@gmail.com. There's a 5-day, no obligation. You don't have to put a credit card, nothing to it. Just email me. I'll set it up so you can be in the room for 5 days and try it out. I don't charge much for the room. It's $95 for a live trading room, where I email out a TradeStation plan every night. I put the plan together, and I walk through the trading day, and pretty much I'm teaching through the course of the day while I'm trading. And I think it's a pretty invaluable service. I think it's fairly priced. Actually, I think it's below market. I think most rooms now are, I see everywhere from $150 to $450 a month. And I do coach people individually, but that's another matter. If you're interested in that, just email me. We can discuss it some other time. So, anyways, if anyone has any other questions, otherwise that is a wrap. I do not know what to expect tomorrow. That was pretty surprising reversal, but we still have not broken. This area down here is begging to get tested. This 25, 26. This area is begging to get tested, and there's just a little bump standing in its way right there at 29. But the big area is this 26. Then you have Obama low, Obamacare low. That was the 1820. And below that we have 0912. Those are the big areas below. And yeah, that's. And I'll post on the Twitter link my email if anyone wants to get in touch with me, or if anyone has any specific questions. But I thought that was a very interesting day. But you can see on the chart, look on the chart, there's no damage done. Isn't that interesting? All we did, this is really cool, all we did was we just poked our head above, right? We're still on the 24-hour basis. We're forming higher highs, right? And higher lows. So I'm not bearish, not yet, because nothing's happened. When you're making higher highs and higher lows, you can have down days in that process, but it wasn't a strong close, and that's not good, right? But we didn't break the low. Now, maybe tonight we come down and test this 26. I really hope we can get into this 25, 26, and into that 18 tomorrow. Would be really nice location, and even better, that 0912 would be a really nice trade location for us. And I'm happy when things fall apart. It's better for me because things are more volatile. But I have my doubts. If you look at the day time frame, I don't know that we did any damage there either. Let's go look. Even on the daytime frame, right? You gotta, now, if we open below all of this tomorrow, right, we're one time into the upside. If we even trade below this, that changes the character of the market, and I would look for different setups. And the other thing that concerns me is that there's not much in the way of volume to help us out down here. It's really, you have to come all the way back into this, and this has already been traded over this 20, so you really got to get all the way back into this area and this area and then this area. Those are the three really, the 26, the 1820, which is minor, the 9 to 12, which is major, the 3000 to 05 area in general is major, and then that 88 area is a big time area. So anyways, I'll post my email on the Twitter stream. Thank you all for joining. If you have any questions, you can email me. If you'd like to join us at any point, tradeandperform@gmail.com. Thank you for taking the time to listen to me this afternoon, and y'all have a great night.